Have you ever wondered why a random penny stock suddenly shoots up 200% and then crashes down to almost zero in just a few weeks? Well, my friend, that's not luck. That's not smart investing. That's an operator scam. And right now, it's one of the most dangerous traps in the stock market. In today's video, I'm going to break down how operators are manipulating stocks in 2025. The exact steps they use to lure retail investors like you, real-world examples of this scam. And most importantly, how to protect yourself before it's too late. Stay with me till the end, because missing just one part of this could cost you your entire portfolio. 1. Who are these operators? Operators are not magic traders. They are influential groups or individuals with enough money and connections to control a stock's price, at least temporarily. They're often large traders with deep pockets, connected insiders in small companies, or even syndicates working together through multiple accounts. Their goal? Simple. They want to create hype, push the price up, then dump their shares onto unsuspecting retail investors. 2. How the scam works, step by step. Let's break down the classic 2025 operator scam in plain English. Step 1. Silent accumulation. The operator slowly buys a large number of shares in a small cap or micro cap company. This is usually a stock with low liquidity, meaning it doesn't trade much daily. Step 2. Creating the buzz. Once they hold enough shares, they start generating hype. Fake insider news leaks, paid social media promotions, Telegram and Discord groups hyping the stock, sometimes even fake YouTube videos claiming it's the next big thing. Step 3. The pump. Retail investors see the stock rising. FOMO kicks in. They start buying. The operator keeps pushing the price higher by placing large buy orders. Step 4. The dump. When the price has risen enough, the operator sells, dumping all their shares at inflated prices. The moment they're done selling, the stock crashes. Step 5. The aftermath. Retail investors are left holding shares that have dropped 60%, 70%, sometimes even 90% from the peak. 3. Why 2025 is worse than before. You might think, this has been happening for years. True, but here's why 2025 is more dangerous. AI-driven manipulation. Operators are now using AI bots to spread fake news and hype instantly across multiple platforms. Faster market movements. With zero commission trading, price pumps happen much quicker, sometimes in just hours. Global influence. A scam in one country's market can influence others due to interconnected online communities. 4. Real example of the scam. Let's take an example. No names here for legal reasons. In late 2024, a small tech company's stock was trading at just $0.50. Within 12 days, it shot up to $3.20, a 540% increase. What happened? Fake news claimed the company had signed a huge deal with a Fortune 500 giant. Multiple influencers posted insider tips about the stock. Trading volume jumped 25x overnight. 2 weeks later, the stock was back at $0.60. Investors who bought at $300 lost over 80% of their money. 5. How to protect yourself. Here's the part you must pay attention to. Check the fundamentals. If the company's revenue, profits, or assets don't justify the sudden price jump, it's a red flag. Look at trading volume history. A sudden, unexplained volume spike is often the first sign of operator activity. Beware of social media hype. If you see the same stock being hyped in multiple places at once, think twice. Avoid illiquid stocks. Thinly traded stocks are playgrounds for operators. Set stop-loss orders. Always define your exit point before entering a trade. 6. The harsh truth. The truth is, Operators are not going away. They've been in the market for decades, and they will keep adapting to new technology and platforms. But you, the retail investor, have one advantage. You can choose not to play their game. You can avoid low-quality, hype-driven stocks. You can focus on solid companies with real fundamentals. The market will always have traps. But if you stay informed, disciplined, and patient, those traps won't catch you. If you found this video valuable, share it with someone who might be falling for the hype right now. And remember, in the stock market, the easiest money is often the most dangerous. Stay safe, invest smart, and I'll see you in the next video.